listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you find online at silver-investor.com. Welcome to the show, David.
Good to be back, Jim.
Well, again, we're watching the precious metal markets today. Gold took, I think, around a $40 drop or so. But you said after that huge dump that we saw 3 weeks ago where the price of gold fell like a rocket coming straight down to earth, it climbed up nicely again. And do you think we're going to be looking at a market where metals, precious metals are going to, look very promising and then do a sudden unexpected dip again?
I think we're going to see a very broad trading market here. We had a big sell-off, as you mentioned, April 12th and 15th, with those two black days, the Black Friday and Black Monday, if you want to call it that. And then after things went down and gold and silver dropped sharply, they've been very strong for the last couple of weeks, up almost every day. So this is really normal behavior, and anytime you have a big sell-off like that, you're going to see a retest at some point of those lows. And so it'll be interesting to watch how this happens. It could go back down and do a double bottom. It could break through, who knows. But it'll be interesting to see how that trades, and it really points out the need for investors that still are not fully invested and still believe in the bull story, that they will be buying into weakness rather than strength. So buying yesterday after it rose 2 weeks would not be good tactics or strategy. And this is true not only of the metals, which are still commanding very high premiums in relationship to what they normally do, but also the mining stocks, which have been, they haven't rebounded as sharply as the metal has. So there's still a real opportunity here for listeners to do their research and choose those companies that they think will be the strongest when the bull trend eventually gets started, which I think may take until late summer, early fall, which seems like a long time, but this is already the 1st of May, and you would expect to see some strength in late summer with a tentative bottom put in, a higher bottom probably, and then really things go to town in September. So it's a ways off, but it's also an opportunity for people to look for targets of opportunity, buying weakness and buying in small amounts and being careful in doing their research.
You said people should think in two different categories here. If you think money, think metals, but if you're talking about currency, think paper.
I think that's very important. This is part of the paradigm shift that we talked about last week when we talked about metal cutting paper. This became obvious to a number of people in 2008 and 2009 when the premiums were so much higher than the metal itself, in addition to the fact you couldn't find the metal for the paper for the price. So you had silver quoted at $9 as an example, but you couldn't find it for less than 12 to 15. And we're seeing an echo of that now, only a bigger echo, because people all around the world have been buying in large numbers metal and paying a much different price than the paper price was supposed to be. So if you think of it, it's not like if you buy gold or you buy silver, it's not like you went out and you bought a camping outfit or you bought a boat. You're not really purchasing a consumable. You're actually trading paper currency for real money that's been considered by people as real money for 5,000 or 6,000 years. So if you look at it that way, you actually see yourself as putting yourself into a stronger position. You put it away. You don't obsess about it. You're not trying to make a profit in a week. You're buying real money that will withstand the test of time as it has for several thousand years against paper currency.
When we saw the huge drop in gold prices, and silver always seems to, piggyback on what gold's doing, was that a major manipulation of the market to just try to bring the prices down so the big players could buy the same amount of gold with a lot less paper currency?
There's a lot of evidence that is the case. And of course, these big trading houses like Goldman Sachs and J.P. Morgan and others, they don't just get a hold of a trade and stay on it and hold it up and down. They sell into rallies and they buy into declines. So they're playing on both sides of the market. They're trading entities. Goldman Sachs actually admitted, a couple days ago that they'd closed out their gold short trade at $14.10, I think it was. They made $50 or $60 on that. So that's the kind of trading that's going on. But for us, we're not trying to be traders. We're trying to put together a position that will, over time, we believe, when we hope, and we believe will bring us great rewards over the coming years as paper continues to decline in purchasing power and as governments print more of it And as they do things like Cyprus, where they come in and take 90% of your account and kind of hijack it, which is what they've done basically with their announcement a couple days ago in Cyprus that accounts over 100,000 euros would be divided up into about 37% of that money will be turned into shares of the bank, which the banks are pretty sick to say the least, and about another 25% held in reserve in case they had to put more into the shares, and another 20 or 25% held for future issues. So they basically commandeered 90% of the value of an account over 100,000 euros to do whatever they see fit with. I mean, it's out-and-out theft. And what would not be so unsettling, but other countries, including Canada, the United States, New Zealand, and Australia, have announced that they have a plan set in place to do what, in effect, would be the same thing if the need arises. So that should make people very concerned about having, fairly large amounts of paper currency at risk in their accounts.
You said you noticed a huge sale for both American Gold Eagles and the silver coins.
Yes, American Gold Eagles, I was reading just a couple days ago, they sold the most in 1 month over that they have in 3 years. American Silver Eagles are selling at an average of $3 million or to $4 million a month, which they've been doing all year. This got going really big time before the crisis happened in April, but it's continued. And so we'll see this ebb and flow over time, just like it is with ammunition sales. That was kind of a thing that got going last fall and has still continued. And I think you're going to see the same kind of an outcome. The day will come when gold and silver will be unavailable at reasonable prices and maybe unavailable at all. So this is going to keep on going on with this interaction that we have between all the excess paper printing and the demand for, as more and more people see that real money, they need to have some of that, which is gold and silver. And, of course, the mining stocks come into their own as ability to hopefully leverage more. In other words, if gold goes up by 30%, then a good miner might go up by 60 to 90%. And that has not been the case for the last few years. That the mining sector has just been, really slaughtered for all sorts of reasons. But the good companies, the ones that are producers, that are profitable, that are bringing new production on stream, when the metals market starts its next bull leg, which I believe it will be underway by this fall, these are the kind of companies, and by the way, with a lot of insider buying we're seeing now, these companies are already starting to form bases from which they can launch. And I think when that gets underway, when the metals show the strength and the gold and silver go up to challenge those old highs later this year, most likely, we're going to see a very pronounced upward movement in these mining stocks.
Would it be better for the markets if the government banned shorting like they have in Germany?
Well, a case can be made for that, but then the thing is you need a two-sided market. If they ban shorting, what effect that would have, it's hard to say. I mean, it might make for more stability, but the thing is, there's still a big debate going on in the marketplace as to what these prices should be, and as long as that debate continues, you're going to have volatility. One of the things that I would question is the use of the computerized trading programs, which, for example, when you and I, it takes us time to say one sentence, there can be hundreds of these micro trades made on both sides of the market. And so I think that introduces instability into the market and unpredictability. It makes it look like the market has a lot of liquidity, but the reality is that it doesn't, because these orders can be placed and taken out in microseconds. And so how can a person compete with what's going on with that? I think that this computerized trading using these algorithms is really not a healthy thing, but it looks like it's here to stay until there's a big market crack, and then people decide, well, maybe we should limit this a bit.
Moving on to another metal that always gets attention, uranium. Apparently Russia is closing itself off to international sales of its uranium. That could drive the price up elsewhere for Canadian and American Ukrainian uranium supplies, and especially that big new discovery in northern Saskatchewan. Should people maybe looking at another glowing metal, so to speak?
Well, possibly, and I've traded uranium companies in the past, and I'm not doing too much with them now because the how much use is going to be out there is really unsettled, and I really try to stay with things that I know a little bit more about rather than try to be a generalist. And so I'm continuing to focus on the four precious metals that we talk about often: gold, silver, platinum, and palladium. And I think what's interesting here is that the thesis we developed over the last year about platinum and palladium leading the charge they've become much, they have remained their strength, kept onto their strength more than gold and silver, which is not at all surprising. The supply-demand matrix hasn't changed one iota for the better. It's actually for the worse in regards to the reliability of supply. And I think when this all shakes out, you're going to see platinum and palladium moving up strongly again, and they will lead the charge, and gold and silver will follow.
Of course,
for their own reasons.
Yeah, and platinum and palladium always tied to the auto industry because they're vital components for catalytic converters.
That's really true, but more and more they're also becoming an investment metal through the ETFs, and they're also becoming larger use for jewelry and medicine and science and things like this. So those sidebar uses are expanding in a market that is already very tight in terms of supply.
China is always the thing that we have to look at now. They're kind of the world's economic trend indicator. I know their economy has slowed down a bit because of a massive oversupply of real estate, for one thing, with all these condo towers being built that remain empty. But a lot of experts are telling me, don't worry about a real estate crash in China because of one thing. The communist government owns all the banks.
Well, that's true, and there have been people, and I've listened to these people that have been out there predicting the demise of the Chinese economic miracle for about 10 years now. And, of course, they're going to see some bumps, and they may see a big crash at some point. But if you look at the development of Canadian commerce and American commerce, when they went through their explosive expansion phases in the 19th and early 20th century, there were some pretty big swings in there, but things didn't get derailed. So China, with its 1.3 billion people, can have a couple of train wrecks and not really end up going off the rails so that they can't get back on. But it just means there's a lot of volatility there, and that's going to continue, not only in terms of real estate but other things as well, as they try their new Hukou program, which will be the relocation of up to 600 million people from rural areas to inland cities over the next 10 to 20 years. This is an official government program that is starting a new leaf, which was originally formed in 1953 to kind of have people be located in certain areas that the government felt was better for overall development of the country and the economy, and also keeping civil unrest to a minimum.
Well, when you're talking about moving 600 million, or I was going to say 20 times, I can't even put that into terms. That's like twice America, isn't it?
Right, and as these people move from the rural areas into the cities, they're going to need a lot of the things that city dwellers need. It's going to be a lot more use of all sorts of metals, and the economy will be stimulated because of that. It won't be a smooth transition, but it is one that is, being pushed by the government. And if people move to the cities where they are asked to go, they get government services, and if they don't, they won't get them. And so there'll be a lot of pressure to move into these areas. So it's a huge, huge deal, and it's something that's bigger than you and I can figure out, but we can figure that the trend at this point remains intact.
You, just going back to the gold and silver American Eagle coins, you cautioned people, though, in the past, because those two coins are doing very well and the sales are very strong, don't get sucked into buying other kinds of coins that may not contain a lot of that metal, and you pay a huge premium to buy those coins.
The numismatics and the event coins like, Happy Valentine's Day and things like that, and the state coins, these carry large premiums, and if you go to sell them, you lose that entire premium. In addition, there's another ugly element that's rearing its head, and that is the counterfeiting of not only gold but also silver coins. And Mike Maloney and David Morgan had an interesting discussion for their mastermind listeners and the insiders yesterday. It was taped, and Mike also has on his website on goldsilver.com an interesting discussion where he shows you how to tell the difference between real and fraudulent gold and silver. We're going to see more and more of this as time goes on and the metals get higher, and it really would be sad for any of our listeners to end up buying something that they thought was a real American silver eagle or gold ingot of some kind and find out that there was just plating on the silver eagle or some type of tungsten or something drilled into the center of a gold bar. So I would encourage listeners to go to Mike Maloney's site at goldsilver.com and look at that video that has been posted there. I watched it myself this morning, And also listen to further discussions that David Morgan and Mike Maloney have separately and together about the big issues of the metals, which are still in a primary bull market, in my view.
Is there any way for an ordinary consumer to know if that coin that they bought is the real deal? Or do you have to be an expert or take it to an expert?
Well, it certainly helps to take it to an expert, but you need to be careful where you're buying it from more than anything else. And there is a ring test that you can tell a real silver coin that makes quite a nice ring, and you can see this when Mike Maloney demonstrates it. And interesting, and I'm pretty sure this is true, I think this is where the term sound money came from. I believe that in the early days that people actually tested their silver coins by putting one on their fingertip and hitting it with another one to see if it had that ring. And so if that's true, and I believe it is, then that's a pretty fascinating little history factoid for us to remember.
Well, a good way to end a good way to end the interview for the end of the week, just like the end of my mind, it seems. It started early as well. So, taking a look again, just to review, we should be careful about not confusing money, which you say, you can connect directly to precious metals, and currency, whose value is pretty well artificial now, isn't it, with the trillions of dollars that have been printed around the planet. And I'm using dollars just as a word for currency.
The currency value continues to decline, as all paper currencies do. They buy less and less. Most people don't understand it. They think if they have a lot of money in their pocket, they have a lot of money. They have a lot of paper currency. How much that buys is what it's all about. And gold and silver retain their value through the ups and downs of history, and that is really the way to go if you want to keep the purchasing power and also keep safety where nobody else has a claim on that money but you.
That's nice to know. Keep an eye on your money and make sure it's real. My guest has been, make sure it's the real deal and not just something that's been sold to you as a promising dream. My guest has been David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. You can contact us about this story or any other at info@HowStreet.com. I'm Jim Goddard.